Canada just lost control of its own oil story. Or so Washington thought. But what happened inside 5 boardrooms this week just flipped the entire script, and the people who run America's Gulf Coast refineries know exactly what it means. Suncor Energy, Canadian Natural Resources, Tamarack Valley, Whitecap Resources, and Strathcona Resources have quietly committed to ship at least 400,000 barrels of Alberta crude every single day through a brand new pipeline that didn't even exist 6 months ago. 72% of total capacity, locked in, contracted, signed, before a single piece of earth has been moved. Reuters confirmed it Tuesday through 4 sources with direct knowledge. The Globe and Mail verified it independently. These are not junior companies placing speculative bets. These are Canada's heaviest hitters making decade-long financial commitments on a project that only became possible because Donald Trump signed one piece of paper 13 days ago. If you're tracking what's really happening between Canada and the United States right now, follow along, because we break this story forward every single day. The pipeline is called Bridger. It's a joint venture between Southbow Corporation, spun off from TC Energy just last year, and Wyoming-based Bridger Pipeline, which already operates infrastructure throughout the Rockies and the American Midwest. The route runs from Alberta south through Montana into Guernsey, Wyoming, connecting into existing pipeline corridors that reach Cushing, Oklahoma, then the Illinois hub, and ultimately straight into the U.S. Gulf Coast refining complex. Initial capacity sits at 550,000 barrels per day. With basic compression upgrades, that climbs past 600,000. And here's the piece that almost nobody is talking about. Southbow's Canadian segment revives roughly 150 kilometers of Keystone XL steel that was already in the ground, already welded, sitting completely idle since Joe Biden canceled that project in 2021. That steel has been waiting 4 years. It goes to work now. Here's the number that should stop you cold. In pipeline economics, operators need 80% of capacity committed before they greenlight construction, what the industry calls a final investment decision. Southbow and Bridger need 450,000 barrels per day to cross that threshold. They are already at 400,000, 50,000 barrels away from pulling the trigger on one of the largest pipeline projects North America has seen in a decade. And the clock on CUSMA, Canada's trade agreement renegotiation deadline, is running. 54 days. Stay with us because what these companies just signaled goes far deeper than a pipeline route. Donald Trump signed the cross-border permit on April 24th. His administration framed it as cooperation, but inside the Gulf Coast refining industry, that signature was survival. American refineries along the Gulf are among the most technically sophisticated heavy oil processors on the planet. They were engineered specifically around Alberta's oil sands crude, the dense, bitumen-rich barrels that Venezuela and Mexico can no longer reliably supply. When Canadian pipeline capacity was constrained, those refineries either ran at reduced output or paid a painful premium for inferior replacement crude. Trump's permit wasn't a favor to Canada. It was the American refining lobby protecting its own margins. U.S. Trade Representative Jameson Greer told Canadian negotiators last week that Canada should not use energy as leverage in CUSMA talks. Read that sentence again. Washington told Canada not to use its most valuable asset as a bargaining chip. That's not confidence, that's exposure. Now here's what the trade war commentary keeps missing entirely. While Bridger commits 400,000 barrels south toward American refineries, Trans Mountain is shipping 590,000 barrels west towards South Korea, Japan, and China. And it is full. Every barrel spoken for. LNG Canada just broke its monthly export record, 1 million metric tons of natural gas shipped to Asian markets in April alone. And the proposed West Coast oil pipeline, a new Alberta to Pacific route, is in technical assessment, targeting a federal submission by July 2026. Canada is not picking a direction. Canada is building in every direction simultaneously. And every new route that gets built, every new contract that gets signed, every new barrel that finds a market outside American control reduces the pressure Washington can apply at the negotiating table. When you have 3 buyers, no single buyer owns you. Let's connect this to something that matters to you personally, because 400,000 barrels a day sounds like a number for engineers, not for someone managing a mortgage or watching a retirement account. Every barrel that moves through a Canadian-owned pipeline generates royalties into Alberta's Heritage Fund, federal corporate taxes, and investment returns that flow directly into the Canada Pension Plan. The CPP Investment Board holds significant stakes in Canadian energy infrastructure. When Trans Mountain runs full, when LNG Canada breaks records, when Bridger locks in 400,000 committed barrels, that is CPP money. That is retirement income for millions of Canadians. And the construction phase of Bridger alone will employ thousands of welders, engineers, equipment operators, and project managers on both sides of the border. In Alberta communities that have watched investment leave for a decade, this project is not just economic data, it is a turning point. There is one question the headline number doesn't answer. What happens if Bridger never reaches that 80% threshold? 72% is impressive, but pipeline projects have stalled before, especially when trade negotiations can shift the economics overnight. If CUSMA produces tariff relief on Canadian oil, the financial case for shipping south improves, more producers enter, the threshold gets crossed quickly. If tariffs deepen or talks collapse, some Alberta producers redirect barrels west instead, and Bridger's calculus changes entirely. Southbow and Bridger are actively working to close the remaining 50,000 barrel gap. Industry sources say they are confident, but confident is not signed. The window is closing. The CUSMA deadline will arrive before the construction decision does, and whatever deal gets made in July will shape which direction Canada's oil and Canada's leverage flows for the next 20 years. Here is what is confirmed, on the record and independently verified. 5 of Canada's largest oil producers have committed 400,000 barrels per day to the Bridger pipeline, representing 72% of its 550,000 barrel initial capacity. Trump signed the cross-border permit April 24th. Southbow's Canadian portion revives 150 kilometers of already built Keystone XL infrastructure. The project would increase Canada's U.S. crude exports by more than 12%. Trans Mountain is at full capacity. LNG Canada just set a monthly export record. The West Coast Pipeline is in assessment. Canada's oil sands output is projected to hit 5.3 million barrels per day this year, a national record. What is not confirmed? The final investment decision has not been made. The 80% threshold has not been reached. Construction timelines and in-service dates are not yet public. Environmental and regulatory approvals on the American side remain in progress. Shipper commitments are still confidential. Here is the bottom line. 5 of Canada's most powerful oil companies just voted with their balance sheets. They committed 400,000 barrels a day to a pipeline that didn't exist half a year ago. They are 50,000 barrels from greenlighting construction. Trump signed the permit. Trans Mountain is full. LNG Canada is shipping record volumes to Asia. The West Coast Pipeline is coming. And Canada is not choosing between its American relationship and its Asian future. It is building both, simultaneously, on its own terms. The oil sands are not a stranded asset. They are a 20-year business, and the infrastructure to monetize them is being laid right now, one commitment at a time. We track every development in this story every single day. If you want to know what happens next before anyone else does, subscribe and hit the bell. You won't get this analysis anywhere else. And share this with one person who thinks Canada is losing this trade war, because the numbers tell a completely different story.